Hey there, Scott Shoemaker here. I am an estate planning attorney in Cedar Rapids, Iowa, and I wanted to talk to you a little bit about a telephone call that I received from a client earlier today. The question was whether or not the share of inheritance that he had received was income according to the IRS and was required to be declared on his income tax return. And the answer is normally no. Inheritances are not considered income under the IRS guidelines. That does not mean that an inheritance is tax-free, but instead, estates in Iowa normally have to file a couple of different kinds of tax returns. The first one would be an inheritance tax return. Inheritance tax is due on an inheritance that goes outside basically the immediate descendants of the person that is deceased. So children and spouses don't typically pay inheritance tax, but if you leave something to your brothers, sisters, cousins, friends, whatever, they may end up owing an inheritance tax on that. And typically the estate files that tax. The second type, of course, is if the estate itself makes money. So let's say you make farm income, rental income, you sell securities, those sorts of things are common times where you would have to file the 1041 fiduciary tax return and pay tax on the income that the estate generates. Of course, if the estate is very large, over about $11.5 million, give or take, there is a federal tax return that's required, and that is the federal estate tax. But that doesn't apply to most estates, only to ones that are only very large. So hopefully that answers your question.